You're sitting alone in a tiny apartment at 1:17 in the morning. The only light comes from an aging laptop balanced on a table with one broken leg. Your checking account has just enough money to survive another 2 weeks. Your landlord has already sent a second reminder about rent, and tomorrow morning you'll wake up before sunrise to work another 10-hour shift building someone else's dream. Then your eyes stop on a sentence buried deep inside an article written by a billionaire almost nobody recognizes. It doesn't say start a company. It says own the companies that own the companies. You read that line again and again because something about it refuses to leave your mind. You realize you've spent your entire life learning how to earn money, but almost nobody ever teaches you how to own the machines that create it. That night, while the rest of the city sleeps, you spend $43 registering an LLC. It has no office, no employees, no customers, and no revenue. On paper, it's almost worthless, but inside your mind, it already has a purpose. One day, this company won't sell products. It won't manufacture cars. It won't build software. It will own businesses that do. And if everything goes according to plan, one day that invisible company will quietly control $500 million in assets, while almost nobody knows your name. Phase 1. The Invisible Foundation. The next morning, nothing changes. You still clock into work wearing the same faded boots. You still eat lunch from the same plastic container. Your coworkers still complain about their managers, their salaries, and how expensive everything has become. You nod along because technically they're right. But every night after work, your real shift begins. Instead of watching entertainment, you study acquisition strategies. Instead of scrolling through social media, you read annual reports. Instead of dreaming about becoming rich, you learn how businesses actually produce cash. Slowly, something changes inside you. You stop asking, how can I make more money? And start asking, what can this money buy that will continue paying me long after it's gone? That single question quietly separates your future from almost everyone around you. Every extra dollar goes into your company, not your lifestyle, not vacations, not status. The holding company becomes a vault for your discipline. Nobody notices because discipline is invisible. Phase 2. The First Acquisition. 14 months later, your company makes its first acquisition. It isn't glamorous. There's no headline, no celebration, and definitely no champagne. It's a small online business that most investors would ignore because the profit is barely noticeable. Your friends would probably laugh if they knew what you bought, but they don't. Nobody does. Because you didn't buy it to impress anyone. You bought it because it teaches you something infinitely more valuable than profit. It teaches you how to evaluate businesses, negotiate deals, improve operations, and most importantly, think like an owner instead of an employee. The first monthly payment arrives in your business account while you're standing inside a grocery store comparing the prices of eggs. You stare at the notification for several seconds. It isn't life-changing money, but it is the first dollar you've ever earned without trading your time for it. In that moment, something permanent happens. Your confidence no longer depends on your paycheck. It depends on ownership. Phase 3. Quiet Compounding. Years pass without anybody realizing your life is changing. You still drive the same reliable car. You still rent instead of buying a mansion. You still wear clothes until they actually need replacing. People assume you're financially average because your lifestyle gives them no reason to think otherwise. They mistake simplicity for limitation. You quietly let them. Every business your holding company acquires sends more cash back into the system. That cash purchases another business, which produces more cash, which purchases another asset. The machine begins feeding itself. That's when you finally understand why the world's wealthiest families rarely chase income. They build structures that create income automatically.
Your holding company slowly expands into industries most people never even think about. A small logistics company, a commercial warehouse, a software subscription business, a minority ownership in a manufacturing supplier. None of them are exciting individually. Together, they're becoming an empire hidden behind paperwork. Phase 4. Nobody notices. By your 5th year, the holding company's valuation quietly crosses $50 million. You don't throw a party, you don't post about it online, you don't even tell your parents. Instead, you close your laptop, make dinner, and wake up the next morning exactly like every other day. But something fascinating begins happening around you. Bankers who ignored your emails now introduce themselves first. Lawyers suddenly want to schedule meetings. Investors who once dismissed your ideas begin asking if you're interested in partnerships. Nothing about your appearance has changed, only the numbers hidden behind your company have. That's when you discover one of wealth's strangest secrets. Money doesn't simply buy opportunities, it changes who brings opportunities to you. Yet you continue saying almost nothing because you've learned something far more valuable than recognition. The quieter you become, the easier it is to build without interference.
Phase 5. The machine starts thinking for you. 7 years after registering that tiny company at your kitchen table, something strange happens. You stop measuring success by how much money sits in your bank account. Instead, you measure it by one question. If I disappeared for the next 6 months, would my businesses continue growing without me? At first, the answer is no. Every major decision still lands on your desk. Every acquisition still needs your approval. Every negotiation still depends on your judgment. That's when you realized you've accidentally built another job, only this one pays far better than the last. So instead of buying another business, you invest in something far less exciting: people. A better operator, a world-class CFO, experienced managers who know more than you ever will about their industries. For the first time, your responsibility shifts from running businesses to choosing the people who run them. It's uncomfortable because you're giving away control, but deep down you understand a truth that most founders never accept. You don't build a $500 million holding company by doing everything yourself. You build it by creating systems that no longer need you every hour of every day. Slowly, the company becomes less dependent on your effort and more dependent on its structure. That's when real scale begins. Phase 6. The world sees nothing. By year 10, your holding company quietly owns pieces of businesses spread across industries that have almost nothing in common: logistics, commercial real estate, healthcare software, manufacturing, renewable energy, private lending. Every acquisition is intentionally boring. Nobody on social media celebrates boring businesses. Nobody films videos about warehouses or accounting software or industrial suppliers. But every month, those invisible companies quietly send cash back to the holding company. And every month, that cash buys another asset. The cycle becomes almost mechanical. Around you, people continue chasing trends. One year, everyone wants cryptocurrency. The next year, everyone wants artificial intelligence. The year after that, it's something completely different. You watch every wave without feeling the need to join it, because you've stopped chasing excitement. You're chasing durability. Friends still assume you're doing pretty well. They have no idea that the company they have never heard of now controls assets worth hundreds of millions of dollars. Sometimes they joke about billionaires hiding in private islands while you're sitting across the table eating ordinary food in an ordinary restaurant wearing an ordinary watch. You simply smile. The greatest advantage you've ever built isn't your capital. It's the fact that nobody thinks to look twice. Phase 7. The weight of quiet wealth. The valuation eventually reaches $500 million on paper. You stare at the report longer than you expected to, not because you're celebrating, but because you remember the night this entire journey started. The broken table, the old laptop, the fear that $43 might have been a stupid decision.
$500 million later, almost everything has changed, except you. You still wake up early. You still spend more time reading than showing off. You still think twice before making every major decision. The difference is that your mistakes now have consequences measured in millions instead of hundreds. Wealth didn't remove pressure, it multiplied responsibility. Thousands of employees now work inside companies your holding company owns. Families you've never met depend on decisions you'll make next Tuesday afternoon. That's the moment you realized you were never really building money. You were building responsibility disguised as success. The larger the company becomes, the quieter you become, because confidence no longer needs witnesses. Late one evening, you unlock the office that nobody outside your inner circle even knows exists. On the wall hangs the original certificate from the LLC you registered all those years ago. The paper is slightly faded now. If someone walked into the room, they would probably overlook it completely. But you don't. Because that single piece of paper represents every decision nobody applauded, every weekend nobody saw, every sacrifice nobody understood, every opportunity you refused because it distracted you from something bigger. People spend their entire lives trying to look successful. You spent yours building something so quietly that the world never noticed until it was already impossible to ignore. And maybe that's the greatest lesson hidden inside all of this. Real wealth rarely arrives with noise. It arrives through thousands of ordinary decisions repeated with extraordinary consistency. One asset becomes two become 10 become an empire. Not because you chased attention, but because you protected your focus. So here's the only question that matters now. If nobody could ever know what you were building, would you still have the discipline to build it anyway?